Welcome back to Kryptonite, the podcast where we dig into the stories behind crypto, finance, and the forces shaping the future of money. Today we're exploring one of the most polarizing tokens of 2025, WLFI, also known as World Liberty Financial. It's not just a cryptocurrency, it's a political statement, it's a governance experiment, and it's also, for many traders, a speculative gold rush. WLFI comes with bold claims. A governance-only token, backed by one of the most famous names in American politics, Donald Trump. But it also carries heavy risks: centralized control, whale manipulation, extreme volatility, and controversy at every turn. So, in this episode, we'll unpack WLFI's origins, its tokenomics, its connection to Trump, why it's trending now, and whether it's a revolution in governance, or just another hype cycle waiting to burst. Part 1. The origins of WLFI. World Liberty Financial was born in late 2024, right in the middle of an election cycle where crypto was suddenly becoming a political talking point. Unlike most crypto projects that emerge from anonymous developers or tech startups, WLFI came with a brand name attached from day one, the Trump family. The official line was clear: WLFI wasn't a get-rich-quick coin, it was a governance-only token, meant to give people a voice in how the World Liberty financial ecosystem evolves. But let's be real, crypto markets don't work on ideals alone. The Trump name meant WLFI was instantly in the spotlight. Whether you loved him or hated him, this was Trump's token, and that association lit the fuse for speculation. Here's where things get interesting. Donald Trump had already positioned himself as one of the most crypto-friendly political figures in US history. After years of skepticism, his campaign openly embraced Bitcoin and blockchain in 2024, even floating ideas of Bitcoin reserves for the US economy. So when WLFI launched, it was seen as more than just another governance experiment. It was a political crypto movement. Trump family members were reported to hold enormous amounts of WLFI. In fact, shortly after launch, financial disclosures suggested their holdings were worth billions of dollars on paper. For supporters, buying WLFI was like buying stock in a political vision. For speculators, it was a chance to profit from the headlines. And for critics, it was just another example of personality-driven, hype-fueling risky assets. So what makes WLFI different from other tokens? At its core, WLFI is a governance token. Here's the breakdown. 1 WLFI =, 1 vote on proposals. To prevent one single whale from taking over, there's a 5% cap on voting power per wallet. Proposals can include things like token burns, protocol fee allocation, or new ecosystem initiatives. Execution of decisions is handled through a multi-signature wallet system, meaning no single person controls the outcome. And here's the key point. WLFI does not promise profits, staking rewards, or dividends. It's not meant to be an investment contract. The project goes out of its way to say it's purely about participation. But the crypto market doesn't always care what white papers say. The moment WLFI became tradable, it stopped being just governance and became a speculative trading asset. Initially, WLFI wasn't listed anywhere. Holders had tokens, but they couldn't trade them freely. That changed in July 2025 when the community voted to allow listings. By September 2025, WLFI went live on Binance, the world's largest exchange, with trading pairs like WLFI USDT and WLFI USDC. The result was a trading frenzy, over $2.5 billion in spot trading volume within 24 hours, more than $4 billion in derivatives activity as futures traders piled in. The price spiked close to 46 cents, then crashed back down to around 20 cents. Within days, other exchanges like Coinbase, Kraken, and OKX followed suit. WLFI went from a governance experiment to a global speculative phenomenon almost overnight. Let's dig into the numbers. Total supply, 100 billion WLFI. Circulating supply, approximately 25 billion currently in the market. Insiders, Trump family and early backers hold a significant chunk. Market cap, around $6 billion at today's prices. And then there's the burn mechanism. In September 2025, a community vote approved a buyback and burn plan, using protocol fees to purchase WLFI from the open market and permanently remove it from circulation. The idea? Create scarcity, boost confidence, and counteract selling pressure. This is classic deflationary tokenomics, similar to stock buybacks in traditional markets. But it also means WLFI's fate is tied to how much real demand the ecosystem can generate. So why all the buzz? A few key reasons. Political branding. Trump's name guarantees global media attention. Exchange listings. Binance and Coinbase gave WLFI legitimacy and liquidity. Scarcity narrative. The burn plan attracted holders who believe in long-term upside. Whale drama. The project blacklisted over 270 wallets, including one linked to Justin's son, for suspected manipulation. That move triggered a price bounce and restored some trust. Institutional buy-in. A UAE-based fund even bought $100 million worth of WLFI, signaling interest beyond just retail traders. In short, WLFI has the three things crypto loves most: hype, controversy, and volatility. But let's not sugarcoat it. WLFI is risky. Volatility. It swings like crazy. Launch day traders saw gains of 50% vanish in hours. Governance concentration. Despite a 5% wallet cap, just 2 whale wallets reportedly controlled over 56% of voting power in a recent proposal. That's not very decentralized. Centralized control, freezing wallets and blacklisting addresses raises questions. If WLFI can turn off wallets, is it really a trustless system? Political risk. Tying a token to a polarizing figure means prices could react to politics as much as market forces. If Trump gains power, WLFI might soar. If not, it could collapse. Speculation over use case. Let's be honest, most traders don't care about governance. They're here to flip the token. That disconnect could undermine the project's stated purpose. So, what do we make of WLFI? It's part political movement, part governance experiment, and part speculative frenzy. It represents a new kind of crypto, one where branding and narrative matter as much as technology. For some, WLFI is a chance to be part of history. For others, it's a risky gamble on hype. Either way, WLFI has forced its way into the crypto spotlight. And love it or hate it, it's shaping the conversation about what tokens can represent. This is Kryptonite. Thanks for listening. If you enjoyed this deep dive into WLFI, subscribe for more breakdowns of the tokens shaping tomorrow's financial system.